Abhishek, hi, good to have you with us. How have you been?
Hi Ashu, great to be here. Things have been good.
Abhishek, this is a very exciting and an important session, right? And this was a conversation that I was looking forward to. It took us some time, to get to you, right, and get you in the room. But this is an important conversation, right? I think, for a variety of things, right? One is that you've been an entrepreneur. You've built an extremely successful organization. You're an investor, right? But I think more importantly, I think which is a common constant across both of these aspects, right, of what you do, right, is that you deal with data day in day out, right? And I think post COVID, the behavior of the consumers has kind of changed, right? And that's the only way to sort of comprehend what we're going to be experiencing, right, as a business, as an economy. I think is to deep dive into that data, right, and dissect it better. Thus, this conversation becomes important in that context, right? But before we do that, Abhishek, we'll start with your journey. It'll be a lovely, starting point if you could, give us a quick rundown of, how you started, how it all started, right? And then we move into our discussion today.
So I'm born and brought up in Jodhpur, Rajasthan.
Wow.
Grew up in a conventional Marwadi family.
Right.
Grew up in vicinity of a lot of cousins, a lot of relatives, all living close by to each other. And I was very academically oriented in early days. So went to IIT Kanpur, computer science. I was top 100 JEE ranker in my cohort.
Wow.
And then started my career as a programmer. Worked with Yahoo and Amazon.
Right.
Yahoo was at the peak of internet era at that time, and they had like hundreds of business units at that time. And I joined Amazon in 2006. That was when Amazon launched EC2.
Right.
And that was also the time that everybody thought Amazon has completely lost the plot. And
right.
So I think I had the fortune of seeing how some of the large ideas can also be misunderstood in their own times.
Right.
And then was fortunate to meet Accel Partners folks and joined Accel as an internet investor right after a programming job.
Right.
And that was when I also got involved with Flipkart. I led their seed round for Accel.
Right.
And then left and I thought that startup wave is coming to India, and there is I wanted to give it entrepreneurship a shot, and left.
Right.
And did Urban Touch early. So that was funded by Accel and Tiger. And then started Tracxn in 2013.
Right.
So Tracxn was an idea which was born from the journey at Accel. So I thought a platform this should have existed when we were investing.
Right.
And that was a brief history about my journey before we started Tracxn.
Super. Abhishek, what is interesting is that you've been through a very, very interesting time, right? I think some of the pieces that you kind of pointed out to, right? Leading that round in Flipkart, right? The internet era sort of kind of unfolding, right? With what Amazon did, and then of course, what we've seen, right? It's been absolutely phenomenal. I mean, I would love to sort of have a separate conversation on that one, right? And I'm sure there's just so much to learn, right? And I think completely buy into your point, right? That ideas can be grossly misunderstood, right? And I think I think people have. My observation is people have underestimated the market, right, and the powers of market, right, and the powers of exposure and aspiration, right. And I think that's really shifted the game in favor of startups, because founders were essentially experiencing that same thing firsthand, right. But I think we're going to save some of that for our next conversation, right, where we talk about a lot of these trends and tendencies, right. We'll keep this a little more macro. Would love to know a little more about the construct of Tracxn, right. You're a large data-driven company. You're essentially powering a lot of primary research which is happening across organizations, right? So tell us a little more about that. Tell us a little more about the construct of the company. Which all markets are you operating in? Where does Tracxn stand as on date?
Okay. So I think we wanted to build a global platform from day one. Right. So we actually got incubated in Lightspeed US. We spent 4 months there working with them closely to figure out what should we be building. Mm-hmm. And we also had luxury from learning from global public market data platforms like Bloomberg, Refinitiv, Capital IQ. So we thought that eventually, like for our customers, we'll need to build hundreds of data points to make their job easy. And even today, like platforms like Bloomberg continue to add more data points.
Right.
And we also know that we also learned from them that eventually the payability of financial market is very high. So we don't have to worry about cost as much. We can continue to give them the data that they need, and eventually math will work out.
Right.
So we started with that broad assumption. Bloomberg today is actually 13 billion in revenue.
Right.
So these markets can eventually become very, very large. It's very easy to underestimate those in early days. But we started with that playbook, we learned from them, and then we started figuring out things that we needed from when we were investors.
Right.
So to give an example, whenever a company writes to us, the first thing I want to know is that what are the other players in that market?
Right.
Or what are the large players in global market?
Right.
And both of these problems were largely manual. So we thought that maybe we can start with solving that. And so we build our own taxonomy to map millions of companies, and we build features around that. Shareholding pattern is very important, so we build cap table.
Right.
And so we build modules after modules, and I think our aspiration was always global. So today we have customers in like 50 countries.
Wow.
We have customers in South Korea, we have customers in Japan, we have customers in a lot of European countries, we have customers in South America. And very interesting thing is that all these customers were sold to sitting in India.
Very interesting.
We don't have physical presence in any of these countries, not for sales, neither for support. We acquired them digitally. They came to us. We gave them a demo over a Zoom call.
Right.
And then they signed up our platform. So I think the aspiration was to build global platform, companies looking at local company. Let's say somebody is sitting in UK. They find UK startups through our platform, and we build all the data from India. We distribute that data from India.
Very interesting. Very interesting. Abhishek, I have in my earlier assignment, right, I was running one of the most successful accelerators, right, and I had the experience of dealing with your team, right, and I think it's always been calibrated. I think I was kind of surprised for it, right? It was always calibrated for to operate digitally, right, which was very surprising at that point in time, right, because I think pre 2019, right, I think we were definitely in a phase where touch and feel was very, very important. I think India is a market where, and given I was operating in India, right, I think trust has, when you look at trust, right, and the weighted average when you break that down, touch and feel has the largest weightage, right, around that entire thing. But I think here was Tracxn team, which was very persistent, which was very professional, right, and I think I had a phenomenal experience, right, and they were very clear. I think a lot of those things were defined, right, which also speaks of you and your leadership team, right, in terms of how you cut it out, right, with that sharpness, right, so that there are no errors, aberrations, unexpected events, right, which was a very, very positive experience. Abhishek, I'm going to move into some of the critical issues when you talk of data, right? When you talk of data platform, I started my career as a banker. I dealt a lot with Bloomberg-like platforms. I have worked extensively on stock trading terminals, so on and so forth, right? Now, when you look at that kind of a market, when you look at secondary markets thrives on information, right? There's a certain speed at which it operates, and thus becomes important that the information is flowing in so much more seamlessly, right? And of course, with SEBI now, of course, they're tracking the news over a period of time. Disclosures have become important, right? But as soon as you start looking at the primary market side of things, that becomes a little bit of an issue, right? There are lags, there is inconsistent information. There are those challenges, right? How do you deal with that, right? At a product level, what are some of those mechanics? What are some of those processes that have been put in place to ensure that the information is up to date, right? In India and across, right? What are some of those things? I'd love to understand a little more about that.
No, I think you hit the bullseye, because we are in the business of providing enterprise grade data to some degree. So taking publicly available large massive data and converting it into a enterprise grade data which is actionable, which somebody can use while they're making a business decision, is the core IP. And that is what even public market data guys have solved. So when we were starting, we were always thinking that for public companies, most of the data is public, right? So why are people paying Bloomberg and Refinatives of the world so much, and what data are they providing additionally? But then over time, when we spoke and we did research, we realized that converting it into slightly more enterprise grade is what generates the value. And our focus from day one was to take ordinary set of data, make them actionable. So to give you a simple example, for an investor, Ola is very different from Meru. Right? You intuitively understand it, and you can actually go to Google and search and find cab companies. That is not enterprise grade data. So just taking these companies and organizing it into a manner where investors can make it actionable. That is a critical element. And second, making it more accurate. So all the energy went into that. Actionable and enterprise grade. These are the two keywords on which we built everything. And the interesting part that we learned was that from outside, it may look like a simple problem, but it's a very non-trivial problem. And all these large data companies have actually not just built capabilities in-house. Even if you look at, let's say, Morningstar, whenever they went into a new data segment, they actually always bought a company. So when they went to ESG, they bought a company. When they went to private markets, they bought a company.
Right.
So even after having so much exposure, they end up buying a company because like learning curve is very high.
Right.
So just taking let's say a simple example, when was this company founded? It's a simple problem.
Right.
Converting it into an enterprise grade data is a hard problem, and they require a lot of competency. So over time, as you make more and more decision, I think your rule book becomes more comprehensive.
Right.
Or if there is an algorithm that you have written, the more data you provide over time, the more accurate that algorithm becomes.
Right.
So we have a lot of algorithms and a lot of human rule books at our end. So over time, each rule book can get like 1,000 line long, or each algorithm can have like million decisions, which makes it more and more accurate.
Right.
So I think data around below algorithms and length of rulebook actually creates enterprise grade data, and that takes a lot of time.
Very interesting. Abhishek, when you say actionable data, right? I mean, I understand when you try and bring in a lot of variables, and there could be direct variables, and then there are indirect variables, right? There are micros that determine a business, and then there are macros that determine a business, right? Now, usually, I mean, when you look at RBI like infrastructure, I mean, RBI like institutions, or when you're looking at IMF, you're looking at World Bank, right? They're using a lot of macro data. They look at a lot of factors, right? They're looking at a lot of trade data and stuff like that, right? Now, usually when we are dealing with private market data, right, it's more micro data, right? In terms of, how is this company performed? What's the silo doing, right? We typically do not tend to bring in a lot of macro aspects in terms of, say, for example, a shift like COVID, right, which disrupted. Now, there is disruption which is happening across each silo that operated, right? And these silos are interlinked, right? Now, there are very few platforms that can actually and very seamlessly help somebody understand that, listen, because of this event, right, there's a disruption which has happened in the agri-trade business, or con-trade business, for example, in the US, right? Now, that could dominate or that could just change the dynamics of the whole trade cycle in the country, right? That means you need better inventorization, or looking at it from an investment standpoint, right? Are there when you say actionable data, right? Are there factors like that you build into that data? Are we still operating in a zone where we are very micro, saying that this is a company, these are 10 competitors in India market, international markets, this is essentially how they're behaving, this could possibly be the reason? How do you do that, right? I'd love to understand a little more about that.
Correct. So I think one of the things we have a very interesting, very fine-grained taxonomy,
right,
which actually helps us. So which helps us monitor what entrepreneurs at large are thinking. So to give you an example, suddenly, let's say in media, this whole subscription business is taking off. Instead of free, now people are saying that we will do subscription in media.
Right. Interesting.
So we will, based on our data, start seeing that a lot more and more companies are getting created there.
Right.
So you can monitor en masse what entrepreneurs in the world are thinking.
Right. Interesting.
So that is obviously a micro view, but at the same time, entrepreneurs have factored in all the macro variables and figured out where the new opportunity exists, and we get to actually track that at a minute level, and then be able to say that, oh, suddenly we are seeing a great momentum in NFT companies, or we are suddenly seeing a lot of momentum in another sector that is interesting. Or for example, when COVID hit, we started seeing a lot more grocery companies coming up.
Right.
So because of that, we are able to actually use these micro insights to figure out what macro has moved.
Right. Interesting.
And that is something which is very useful for investors. So we have a section called trending themes.
Right.
Which is, we use a lot of data to figure out where are entrepreneurs creating companies for the first time. And
right.
That helps us sort of flag those actors. Oh, this is an area where, like people say, right, you cannot stop an idea whose time has come. So
right.
we are actually able to monitor that very first hand and see that this is the idea where time has come, and a lot of entrepreneurs have suddenly started to go after this market, and we should look at it seriously. And that is one of the very interesting things, that this is the first time our data is telling you that there is entrepreneur activity happening.
Right. Very interesting. And I think that's possibly a classical, bottom up, right? Where you're aggregating a lot of intelligence which is available,
right,
and which is just so much more important, right? And see that momentum. And I completely agree into what you're saying, right? That eventually a founder would have sorted a lot of this out, right? You see that in performance data, right? And when you see it in performance data, and that's largely a reflection of how the market is kind of accepting and not accepting it, and that's a beautiful way to sort of put it across. Abhishek, what are some of the next upcoming things for Tracxn, right? I mean, this is a conversation that we're going to have in two halves, right? Like we discussed, right? And I want to move into the other side, right? Post this question, but what are the next few things that we see for Tracxn, right? What are some of the new product aspects that you are working to launch with your team? I'd love to understand a little more about that.
Right. So I think for me personally, I think now I'm spending a lot more time with distribution. I think on the product and data front, I think our customers are really happy. When I talk to my customers, they say that, look, you have significantly large amount of data. Now actually we need to learn more how to use the product instead of saying that product doesn't have this, product doesn't have that. So there are like very large set of modules that they have, or a lot of features that they have that they need.
Right.
Now, for me, a big focus area is to build distribution a lot more aggressively. I'm working a lot more with support so that we can have better adoption among customers. And that is one big area.
Right.
And I think the innovation on product and offering front will continue, but I think we feel that we will now next 2-3 years will be much more about distribution.
Interesting.
And I want to see much wider adoption among like investors as well as corporate fronts. That is one. That is another area where we are seeing a lot of momentum.
Interesting. Abhishek, what are some of the challenges, right? I mean, this is something which is, you're operating in a B2B environment, right? My particularly challenge in the B2B environment has been that, it's a very slow moving business, right? It just requires so much effort and patience, right, to be at it. And that's largely because there are just too many stakeholders, right? Now, what's your view in it, right? And that also sort of walks me into our next section of the conversation, right? How do you solve for that, right? I mean, how do you ensure that everybody is motivated at it, right? What are some of those, ethos that you possibly, built within the organization, you've ingrained within the organization, right? So that everybody's on the ball, they're geared, right? To ensure that while it's a long cycle, right? Long conversion cycle, sales cycle, conversions continue to happen, they continue to take, right? What's your sense of that?
So I think there are two things that matter there. So one is that I think enterprises at large has become much faster at buying product now as compared to, let's say, 5 years or 10 years back. And that is also because the quality of product has improved, quality of distribution has improved. So they are able to take that call. So earlier people would sell $200,000 or $300,000 contracts,
right?
Which obviously is a longer sales cycle. Right. But now because of mid-market or what is called an inside sales cycle, I think the price point is reduced. So you start small, SaaS has come, so you don't enter long-term contracts and licensing. You start with 1 or 2 seats, you adopt it, you build your proof point, and then you scale. So because of this whole subscription pricing, like low starting price points, I think that adoption cycle has become faster.
Right.
And secondly, I think the other thing that worked in our favor is this whole content marketing. So because we are a data company, we are able to generate a lot of exciting reports, awards. And because of this, we see a lot of, like most of the customers that I meet today, they say that, oh, I saw one of your reports and that's how I got familiar with the product. So I think the more SaaS founders can work on marketing, which is selling them the brand significantly before you actually sell them the product, is interesting in my opinion. And so I made a trip to New York like 2 years back, just before COVID.
Right.
I met like 13 people. 11 of them had seen one of our reports earlier.
Wow.
So, and they had seen multiple of them over 2 years before they became our customers.
Right. Interesting.
So I think that is the power of selling the brand before the product.
I agree. Makes sense. No, that's very interesting. Abhishek, we're going to move into the second part of our conversation, right? Which is the more exciting part of the conversation, right? And I'm sure you are at it, right? I think you've been one of the most active people in the angel circuit, right? You've been investing, you've been talking to founders, you've been advising them, you've been at it, right? You've been spending a substantial amount of time, right? And I think you're in a very unique position, right? You're in a vantage point because you're seeing a lot of that movement, right? You're seeing a lot of performance data. You're seeing a lot of movement of money, right? In terms of how, for example, VCs prioritizing investment, right? I'd love to know a little more about your portfolio as the starting point of the sector, right? What is your portfolio right now? And which are the companies that you invested in? Without, of course, giving out specifics, because I understand there's a lot of information that you can't share, and I respect that, right? But whatever you can share, I'd love to know about your portfolio.
Right. So I think for me, like angel investing was a natural extension because after leaving Excel, I had met a lot of founders during that 3 years. I probably met like 1,000 founders during those 3 years. And my venture ecosystem was very small then. There were like a handful of 10 VCs who were investing in, and I was known as the person who had done the Flipkart deal. So a lot of founders would naturally come to me.
Right.
So between 2011 to 13, I did like 10 deals. Delivery was part of that cohort. Delivery was actually my first angel investment.
Right.
And then I raised a fund called Tracxn Labs, through which I actually did 65 seed stage deals.
Mm-hmm.
And then after that, I started investing personally again. So in all, I think I would have invested in 150 deals across these multiple channels over the last 10 years. And
which are some of the key sectors that you've gone after? I mean, which are the ones you're very excited about, right? And would love to know a little bit of a background, right? I mean, possibly you said 2 or 3 of them you think. So delivery, for example, you highlighted, right? Would love to know a little more about that.
So I think I largely like software and technology. So like software would be like Microsoft, right? This is 100% software. Or broad technology enabled businesses would be like Flipkart or Delivery, where technology plays a very big role, but it's still like an offline brick and mortar companies in some ways. And but it has to be always tech heavy. I have done a lot lesser companies outside that.
Right.
And so I think in the initial cohorts, I think Flipkart, Delivery were there. Then Rupeek came out from 2014-15 vintage.
Right.
Airmeet was more recent. Airmeet does online virtual events.
Right.
And I think Gamescraft was in gaming. So bunch of interesting companies happened during that period. I think Zedai is another one I'm excited about. They do product management suite, which is like Atlassian for product managers.
Right.
And but again, like all companies are exciting in their own ways.
I know it's a difficult one.
I have really like enjoyed my time with a lot of them, and a lot of them are raising bar in their own ways.
Right.
And but I have kept it very wide in some way. I thought my investment criteria is that either I know the founder for a while and they are solving something which has not been solved before, or somebody I know really well and I trust their judgment is investing, and then I look at it closely. And so it's a conventional angel investment. It's not like VC where I meet hundreds of companies and then invest in few. It's a very selective look that I get a chance at. And then
interesting. Abhishek, a fun question, right? And I think this is something that I ask a lot of my founder friends who are kind of now investing, right? And there's something called a founder's itch, right? You constantly, you batting yourself, right? You constantly want to go out and bat, right? You can see what's wrong that possibly a founder or founding team is committing, right? And you want to actually go on. How do you control yourself in an event like that, right? How do you control yourself, given that your portfolio is fairly large, 150 of them, right? I'm sure you prioritize, right, in terms of your meetings, spending time, so on and so forth, right? And you are busy building Tracxn, and that's a fairly serious business, right? It requires different kind of effort, right? But how do you control that itch? Going to a founder, telling him that, listen, you're doing something wrong, right? Or you're about to, that entire process is very important. You can anticipate a few things in your capacity because you built a business, right? How do you control that? How do you manage that that relationship?
Right. No, I think you have to understand that in your own company, you are the captain, and everybody else's company, you are probably an advisor or a coach.
Right.
They have to do the job. I think in most cases, the way I work with companies is that I help them when they reach out to me. I don't proactively push them into doing something.
Right.
I'm not a board member. Like unlike a fund where they meet quarterly, they meet monthly, they make sure that all decisions are same.
Right.
Our job as an angel is more to help them specifically when they ask for help.
Right.
And then you become very proactive and you help them as much as you can.
Interesting.
So that way, I think you have to be very. Otherwise, there is a high chance that they are doing the right thing, and you have actually, because of your past experiences, you are actually not letting them innovate on a thing which has not been done before. Startups are all about doing things which have not been done before, right? So your experience can actually be counterproductive sometimes.
That's a very interesting point that you've highlighted, right? In fact, I wanted to cover this point in a question, right? And possibly a few questions later, but I'm going to do it now, right? Abhishek, what's your sense? How has COVID changed this entire thing? My thesis is, right, that I think everything. I mean, we've literally hit a reset button, right? I think we're in a very different environment. The consumers, we've kind of shifted to a digital environment overnight, right? What is more exciting, right? And I think which is going to be a very critical piece, right, which is going to propel us into a very different orbit, right? Is the availability of cross-chief data. I think that's something which has been discussed on many occasions, but also the fact that people had time and they were consuming content, right? Now, what's that done is that it's reduced this arbitrage, right? And we've gotten extremely comfortable, right, with going online, ordering very quickly, returning it, right? It's just become so much more easier. What do you make out of the situation, right? I mean, what are we headed into? I mean, given you're in the numbers, you're the numbers guy, you're kind of tracking it day in, day out. But what do you make out of an event like this? I mean, we're in a completely uncharted territory. It's, on a consumer side, it's very, very exciting, right? Of course, we're on low savings and a bunch of other macroeconomic issues, right? But aspirationally, we are peaking, right? Digitally, we are peaking. Adoption-wise, we're peaking, right? What do you make an event of this, right? I mean, this is a consumer behavior we never kind of saw expected, right? What? And you're from Jodhpur, right? So you understand what I'm kind of talking. I'm from Bhopal, right? That's my home city. I'm talking about it performing at a level of that of a Delhi or a Bombay or a Bangalore, right? That got out of this. What do you make out of this situation?
Absolutely. No, I think so. COVID has been a watershed moment in like a lot of dimensions.
Sure.
So there are a lot of macro data, but I think I'll give you an anecdotal evidence in my own family. Like our parents are familiar with internet. They like mail. They used to do WhatsApp. They used to chat, but they were not going online and finding gifts for their grandchildren.
Right.
That used to still come to us earlier.
Right.
But during this COVID period, they all were forced into learning actually to do complicated transactions online.
Right.
And because of that, now they can book their own train tickets, they can book their flight tickets, they can actually shop gifts for their grandchildren now.
Right.
So that whole hitch of actually doing complex transactions outside mail and chat got done through this period. And that learning curve is long lasting. They are not going to forget how to order grocery now. So they can order food now, they can order grocery, they can order tickets, they can order books, they can order gifts. What else would you expect, right? So I think that this is a crash course on like the entire internet, which was what Web 1.0 was what they were at, and now they have done Web 2.0 as well.
Right.
So I think that is a huge, massive shift, and that will open up. It will significantly increase the transacting user base.
Right.
And if I forget about the parents for a while, and if I talk about myself, I used to shop more at Amazon and Flipkart. Now I actually am more comfortable shopping at smaller brand stores also.
Right.
Because a lot of them were either not available through there, or my willingness to experiment increased significantly. So now I order a lot of goods directly from the brand's website that I didn't used to do before. So I had never ordered a HP like ink before from HP. First time I did that. So I also got new learning curve on ordering outside the top 5 channels. And that is a big wave. So this will open up the entire D2C channel for India.
Very interesting.
So I think we have started to venture out of the comfort zone of the big e-commerce companies now.
Very interesting. Abhishek, which are the sectors that you're excited about, right? D2C you highlighted. I mean, I'm personally excited about D2C, right? Which are some of the other areas that you think are going to do phenomenally well, right? I mean, everybody today is talking fintech, right? Either somebody is an enabler, somebody or has a distribution network which they want to sort of which they want to plug in fintech into, right? I mean, what do you see or what do you make out of this, right? What are some of the key sectors that you think are super exciting right now, given what we're entering?
No, I think from where I sit, I think everything looks like a white space.
Interesting.
I think this is the golden age of startup ecosystem. It's a golden age to become a founder. Everything is up for software adoption.
Right.
Like be it fintech, be it edtech, SaaS has actually come in a very big way. I was always so when we started, there was no wave called SaaS, right? We were the contrarian at that time. Now SaaS is mainstream, and it is among the most exciting waves because we will build the software out of India for almost like thousands of industries.
Right.
And we will enjoy US revenue with India cost advantage, which IT industry enjoyed for so many years.
Right.
Like if you look at market caps of TCS, Infosys, Wipro, all of them put together, it's a large number.
Right.
Now I think that we will do a parallel in software adoption. So that actually can create like thousands of unicorns in India. So that's a very, very massive opportunity. Fintech is huge. I think UPI has set the bar very high. And India will, I think, innovate ahead of everybody in the world now in fintech.
That's amazing.
I think you touch everything, and there is innovation happening, right? And
Abhishek, I have similar thoughts, right? But when you talk to people who operate in the traditional ecosystem, right, or are employees, right, I think they still don't understand what we're headed into, right? They've unconsciously become part of this entire consumption boom, right? But they don't necessarily realize, right, what we are headed into, right, as an economy. Abhishek, one question that I have, right, now when you look at the capital landscape, right, a lot of our capital, essentially, we've largely as a startup ecosystem, as an innovation ecosystem, we've largely been dependent on capital coming from more developed markets, right? Markets that have experienced some sort of a rush, they've seen adoption, right? Then of course it gets passed on, which is very typical. We now have started to see a lot of founders, for example, coming in and participating because of the wealth that they've created, right? Traditional capital is still not coming in, right? I mean, if you look at a say 2015, 2014, 2015 era, Indian private equity funds used to be much smaller in the kind of AUMs that they were handling, right? Only when venture capital funds started to sort of started to invest, the capital became bigger, international started. That system started to grow, but it's still much smaller, right? I mean, equity as a savings is just about under 3%, 4%, right, of the overall, participation that we make, right, across other instruments. What's your sense of it, right? How do you see this capital dependence on largely external participation, right? I mean, if you look at US market, they're largely the engine of of participation, right? They're investing in their own markets, they're investing in other markets, right? What do you make out of this, right? I mean, what could this hamper our growth at some point in time, given this dependence? Because they have their own challenges, right? What do you make out of this situation?
Right. So I think 10 years back, I think India was 1%. Indian startup ecosystem used to attract 1% of capital of US.
Right.
Today, it is north of 10%.
Right.
This year, India's capital deployment will be north of 10% of US tech capital deployment.
Right.
So I think we have definitely come a long way. The capital which is coming from Europe and US, I think I don't necessarily see a challenge there. I think that capital isn't coming with any baggage.
Mhm.
And obviously, China capital has some border issues of their own. So I think that will see slow down, and we will only know 10 years on the road if it was right or wrong move. But I think it is what it is today.
Right.
And I don't necessarily see a challenge that we are dependent on US and European capital for startup ecosystem. I think what we are seeing today is not the peak. I think India will command more and more capital, because if you look at underlying data, so we track number of companies being created in India and globally and how it is changing. I think India is producing high quality companies, and which is necessarily what will attract capital.
Right.
Today, a large part of late stage capital that is coming to India was not lean marked for India. Early stage is lean marked by geographies, right? So LP says that this is the money for India, you deploy it in India.
Right.
Late stage capital is not like that. So it is available for anybody who is having good matrices, right? A lot of that capital is coming to India. So we actually fundamentally creating good companies, and the pipeline of new companies is also very strong. So we will continue to attract a lot of capital from there.
Mhm.
I do see that in next 5 years, that will change significantly. In India, domestic LPs will be producing, will become a major stakeholder in this movement. And we are also seeing that we are already seeing early signs. Like there are funds which are having enough domestic LPs now. A lot of founders are becoming LPs. A lot of founders are creating funds. Like Girish has created a fund together. So I think a lot of those things will also happen. It will definitely shift, but it is not something I lose my sleep over, right? So
Interesting.
But foreign capital will come more and more. I think we are far from the peak. I think I am optimistic there. I think India can hit 25% of the market share as US from 10-12% that we are today. So it will significantly go higher than where we are today.
And I think I kind of buy into and agree with what you're saying, right? I think you've seen that transition, right? And I think you understand where we stand today as a market, right? So, and I have no reason to sort of question that or have any particular pointers, right? Abhishek, I'm going to move into certain specific questions, right? Now, you've been investing, right? Fairly actively. You have a view because you have access to data, right? What's your thesis of investing, right? I mean, is it you highlighted 2 points, right? One is that if you know the founder long enough. Second, you know somebody who's investing in that thing, and you kind of trust that person's capability, and that becomes the thing, right? But what are some of the other things that you look at, right? What are the key factors that you look at when you're making that investment?
Correct. So I think so that becomes a qualification factor that maybe I know the founder from past, or maybe somebody I trust is investing already. But beyond that, I think you look at broadly 2 points. One is that there's a large white space in that market. So that problem is not solved before. So I gave you an example of Zeta or Airmeet. So Airmeet is building online events platform. So when they started, very few people were building it then. So it was a clear white space. Second, I look at execution capability of the founder. I think for me, it is not a sufficient criteria, but it is a very strong must-have criteria when you invest in a company, that you should believe that that company can really execute. So if I give you an example, if somebody were to start a new media company, so it should be a white space, but I should believe that these guys will create content or articles which are better than what exists today. And they will do a phenomenal job there. It's not a sufficient condition, but it is a must-have condition.
I agree.
So I think I look at these 2 things. There should be a clear white space, and the founder should have I should believe that they can execute it better than most people otherwise. And that makes the cut. So it's a very simple criteria. And because of which I end up, like most of the times in 30 to 45 minutes, you can take a call that this is their early sign of execution. For example, if they build a website, I look at it, if they've done a good job or not. I can open up the code and see if it's well written or not well written. You can see some UIs and see some early signs of execution. So if somebody were to start a media company, I will look at their 3-4 articles and see, is there a depth in it? Can they write well? So that is an execution capability. And then white space. White space is very critical.
Very interesting. Abhishek, something that you kind of alluded to in your point, right? And I think this is something that we're seeing, right? Is a very different kind of a founding or a founder set now coming to the table, right? In India, we're seeing a much more mature founder set. I mean, I started my journey in the startup ecosystem in say 2012, right? Around then, and we used to celebrate the 21, 22 years olds, right? Uh, and today we're seeing a very different lot, right? We're seeing a lot of 35-year-olds, who work with organizations for
Right.
at least 8, 7, 10 years, right? Who have understanding of and internal interfaces, know-hows. There's a lot of that understanding, right? And we're seeing that significant shift happening, right? And you have now a lot of 45-year, for example, right, coming in. People who are taking early retirements and then are kind of setting it up, right? A lot of people. It's a very, very interesting phase, right?
Right.
How important do you think, as we grow, right? We're becoming a fairly complex economy. Now, there are two sides to this particular thing, right? One, the market is becoming younger, right? Now, that essentially means that, a 20-year-old, it's very difficult for me to relate to what my daughter at 9 years old wants, right? And there's clearly that gap that you start to see, right? But here are people who are building that business, right? How do you see this entire? Do you think
Correct.
a lot of what is happening could possibly become inefficient? That's one side of it. Second, with the behavior of change of COVID, right? There was a certain surge in adoption, right? For example, air meet like platforms, right? And there are like a bunch of other platforms that got funded that attracted a lot of excitement, right? But as we get back to normal, we are still an economy which is undereducated, right? Where touch and feel is very important in decision making. Do you
Mm.
think there's going to be tracing methods for that? How do you see these two aspects
Right.
going forward?
No, I think so. 10 years back, we were celebrating 22-year-olds because very few people had worked in a startup and were starting, right? So that
Right.
category didn't exist. Today, I think you have a good example of even like Girish was an executive at Zoho before he
Right.
started. Ulan guys were at Flipkart CXOs before they started. So I think that category is definitely very, very well celebrated. And I usually like backing them because they have
Right.
seen that market closely.
Right.
Having said that, I think 22-year-olds are still a great category, and I continue to get amazed by what kind of ideas they come with,
Right.
and I back a lot of them. It is obviously they are seeing world from a very different perspectives, and
Right.
they can come back with ideas which are completely hard to think that somebody would think about that.
Right.
But I think both these categories are like has their own merits and advantages, and how they see their lives also like
Right.
is very interesting. I think at 30, 35, you know what you're doing, you know the market, what you're going after, you know
Right.
how to execute it. So
Right.
everything is very predictable. They've done at their own pace.
Right.
And 22-year-olds come with like black swan ideas there. And I think we are seeing kind of exposure in them which was never seen before.
Right.
I think I see a lot of founders who know about things which I don't even know now, or I definitely didn't know at that age. I think exposure definitely has changed a lot.
Right.
I think I'm very excited about like both these cohorts and what they
Interesting.
bring to the table.
Interesting. Abhishek, I mean, we've always debated, right? We've been a very traditional business economy, right? Which has been profit first, right? Dhanda ho to profit hona chahiye. And you understand where I'm coming from, right? I mean, you come from a traditional, Marwadi family, right? You come from Jodhpur, right? Which is the heart of Marwad, right? I mean, that's the basic ethos, right? Dhande mein paisa banna chahiye, right? I mean, a lot of people who operate in that ecosystem don't understand the newer world business model, right? So you're letting go of revenue for a certain period of time, right? Uh, Rakesh Jhunjhunwala was speaking at one of the events recently, and he made a quirky comment, right? Where he said that this is exuberance, right? This is excitement.
Mhm.
Eventually, it will be profitability, and market will move to mean, right? And we'll see it then, right? Whether the company survives, doesn't survive. Uh, how do you view that? Right? Do we need to have that? Uh, you know, and this could be, you could answer this question for yourself. You could answer this question
Sure.
at a slightly large level. But what do you make out of the revenue predictability, right?
Yeah.
Do you believe there should be early signs, or do you think companies should scale faster and experiment at a certain point? Because capital still, Indian capital, at least, which is your possibly first go-to
Mhm.
of getting funded, right? Still wants to see a reflection of that. I mean, I think people who are
Right.
making this are still people who grown up in pre-internet era of sorts, right? What do
Absolutely.
you make out of that?
Sure. So I think I am a big believer in large profit pools. So I want to back companies which can eventually make a lot of money. So the money
Right.
can be today or money can be tomorrow.
Uh-huh.
In fact, I don't like companies which are making revenue today, but eventually they will not have high profit pools. So
Right.
that actually, even if there is revenue tomorrow, but I don't believe that they will continue to maintain that margins or it's a
Right.
race to the bottom, I typically don't like backing those companies.
Right.
So I'm okay with delayed gratification of profit, but I am a big believer in profit. That's why I like software businesses a lot, because everything operates at 90% gross margin.
Right.
And I really like thick bottom line companies. Having said that, whenever entrepreneurs come to me for advice, I tell them that, look, for good ideas, there is always going to be capital, which
Right.
you may not be able to see today, but you will see tomorrow. So I'll tell you a very real life example. When we were
Sure.
backing Flipkart, I think the big question was that we will need at least $20 million for this company. How will
Right.
we get access to that kind of capital? That was
Right.
the question in the debate.
Right.
And it was true. McMatter went public to raise $70 million. So
Right.
there was no money. But even then, I think eventually Tiger came, LeafXL came, he gave money, and then more people came, and Microsoft came, SoftBank came. So
Right.
I think what I have started to believe is that if the idea is right, eventually money will find a way towards it.
Right.
So if founder says that, look, I need to monetize today, the answer is no.
Right.
But you should have a very clear, or at least one or two very clear ideas that how will eventually make billions of dollars of profit, even if it's tomorrow. It
Right.
should not be the case that you have no idea how that money will ever get made. So you should
Right.
have, and you can build your company assuming that there will be money available. This was
Right.
not true 20 years back. In 2004, when we were like first thinking about starting up, I think that was not true.
Right.
However good your product or the company is, there was no money available. But today, that's not true.
But listen, I find it most challenging, right? When we actually go out and tell founders, right? When you meet founders, that listen, go out, don't worry about the money. Money will eventually come through, right? But there is a very different mindset, right? I mean, I didn't understand this, early on. I understand a lot about it today, right? Is that when you are building a business, we are not necessarily sure of how the capital is going to flow in, and there is a huge lag when it comes to capital coming in, and disposable capital for investment, right, or high risk investment being available, right? It still takes time. Uh, what essentially happens is that you're calibrating yourself for a very different environment, right? There's a certain realism that comes into your approach, right? You're going to be burning less and all of that, and then you are talking where you are talking about a high burn, right? You're talking about high growth and so forth, right? I find that to be a huge disconnect, right? I think that just requires a complete mindset shift. Unless a founder has money on day zero, that listen, X amount of money has been committed to you, you can't have that kind of mindset. And what do you make out of this? I mean, speed of capital is a big problem, right? How do you see that?
Absolutely. So this is true even for companies which are very, very well funded today. So when
Right.
they were starting, there was no money. And when it pours so much that you are like wondering that why were these same guys not backing me 2 years back when I was like, and every founder has raised like hundreds of millions of dollars. I remember having some conversation with some of them saying that why is everybody else getting funded and nobody funds my idea, right? That always happens. So there is a switch. So initially, when nobody believes in you, you will have very little capital to actually prove what you want to prove before people think you are ready for the next level. But I think you have to do that journey so that you also build proof points. And after that, once there is a proof point, you will get more than what you require to actually scale.
Super.
And good founders I've seen are able to go through that transition and then scale themselves, their team, to quickly scale the company. But that is, I have not seen that become a challenge in many cases. I think the big challenge is holding your nerve while you reach the point where people are ready to give you a lot of money. I think not losing your conviction during that 3-4 year period is very, very critical. Almost every founder has raised like hundreds of millions of dollars. Initially come and complain that, look, why are people not funding me?
I agree. Abhishek, I had this, kind of an observation, right? I mean, I operate out of north of India, right? I mean, I've been there for the longest time, right? When you go to Bangalore, for example, right? I'm talking very India-centric question, right? You find a very different kind of an exuberance, right? The money's moving in faster, right? And that's largely because a lot of tech founders have got, kind of built enterprises. They've had the kind of success, right? And when I look at the consumer, right, and what you sense is that you are out of Koramangala, and you've just done a few experiments. Those experiments have possibly turned out right, and there is money available, right? And then there is this poor guy in, say, north of India who's kind of struggling because there are traditional mindset and traditional tendencies which still exist, right? I have personally found a huge dichotomy, right, in understanding this entire excitement, right?
Right.
And my belief is, right, and is that India is not larger Bangalore, right?
Correct. Absolutely.
It's a market with many lags, right? It's a complicated market, right? I mean, there is homogeneity which has now kind of started to kick in, right? Because of what we've seen. But
Right.
until then, it was difficult, right? And they're itching to go back, right? How do you dissect this, right? When you're investing, or you're just saying that, listen, there's a white space which is available. We are putting in capital. There are a smart set of founders who will possibly figure out the process, right? How do you sort of manage
So
that piece?
I think it's just a natural evolution of our ecosystem, in my opinion. So I came to Bangalore in 2002. So
Right,
I know what Bangalore was in 2006, 7, 8.
right,
Right. So Bangalore was exactly like this. There was no money available. Like
right,
Sachin and Binny went and spent a year before they got their first check.
right,
It was not easy then because there was no capital. Once
right,
that happened, people started believing, people then started deploying more.
right.
I think, in my opinion, Delhi is starting to cross that threshold because of Zomato IPO. Now, I think in next 2 years, there'll be a lot more deployment there.
Right.
And every ecosystem from day zero, it will take 6-7 years before there is liquidity.
Right.
So that is the natural evolution. Once that happens in Delhi, in Bombay, then in Jaipur, you will have to see one large company like Car Dekho has become large
Right.
there. So I think once they they generate IPO, then they will give liquidity to their employees. So that ecosystem will evolve. So I think Jaipur is 5 years away from being a highly liquid economy. Chennai is
Right.
already there because of Freshworks now.
Right.
I think it's a matter of time. I don't think we need to worry too much about it. It's a natural extension. Yes, it is a great opportunity for people in Bangalore to invest outside to get startups at a lower valuation. But I think it's a matter of time.
No, but listen, my question wasn't that, right? My question was essentially, right, that you're not, there could be a market where you find a lot of exuberance, right? A lot of acceptance because there's disposable capital available, right? And I'll give you a small example, okay? My hometown, which is Bhopal, right? We continued to be one of the most costliest markets, right? Because there was an aberration, there was an unfortunate event that happened that brought in a lot of liquidity where people were purchasing, right? And then there are a lot of businesses that came up, which is very natural, principle of economics, right? Very, very fundamental. Uh, what I essentially meant was that you can't expect similar growth in markets outside, right? How do you normalize for that? Is essentially what I want. What I meant with the question that I asked. How do you see that, right? What has it changed for the market? What's it changed for the perception, right? Do you think the naysayers are going to shift sides, right? They're going to come onto the uh,
Right.
they'll they possibly participate in tech faster, right? What's your sense?
So I think even 2 years back, I think we had a debate around listing in India. Should startups think about listing?
Right.
I think the broad consensus or broad advice behind the closed doors was always like, okay, look, you are a startup. Why do you want to go to public market? And they are not going to give you. They are going to give you significantly lesser valuations.
Right.
They are going to be much tougher questions. You will get pushed into like generating profit every quarter very early on. So it will be overall counterproductive for the business. That was a broad closed door advice. Nobody will talk about it publicly, but that was a closed door one-on-one advice that we would get.
Right.
I think everybody was on the fence that should we go public or not. I think with Zomato listing, I think in the kind of acceptance they got, I think people said that, look, the guys on the other side are not completely out of sync, right? They also understand that delayed profits can happen, delayed revenues can happen.
Right.
Consolidative businesses and tech businesses are good. So there was a first proof point of acceptance of tech thesis.
Right.
And I think after that, like hundreds of founders started to prepare for IPO.
Right.
I think in August alone, I think 30 DRHPs were filed, right? And that was like more than 50% of the previous years, right? So in a conventional year, 40 to 50 would get filed. In a month, we had 30. And there will be continued momentum, right? Every week, we would have closed door discussion with a lot of founders thinking about going public and what does it mean, what does it not mean. So it was a 1 percentile event, probability event for most startups earlier. 2 years back, 1% companies used to think that maybe we should go IPO.
Right.
Now, like 60-70% of companies think about IPO as a core strategy. So I think that is one big thing that has happened.
Super. Abhishek, thank you so much. How I want this conversation to go on, right? I mean, there's just so much to discuss, right? I think, and I think we've just touched upon very, very few points, right? But, this was an absolutely spectacular conversation, right? Thank you so much for, taking us to this entire, the journey, right? Your observations, your thesis, right? COVID has been an absolutely, it's been an aberration. It's been an unacceptable event, right? Something that we're not going to see, and I hope we don't see it for a very, very long time, right? For the damage that it's caused. But I think we've become a very different market, right? And I think what you have in this conversation, what you've given us in this conversation is that it requires patience, irrespective of whichever side that you are on, right? if it's a white space, there is excitement on the consumer side. It'll eventually play out, right? It could take few iterations to get it right, but it will eventually play out, right? So just be patient, right? There is no necessity for rushing into things, right? Over engineering things. It will play out, right? Is what we make out of this. Abhishek,
Absolutely.
thank you so much. It was a fantastic conversation. Loved every bit of it. And like I said, right, I'd love to have you with us much sooner, discussing some very specific points, right? Because there are a lot of observational points, observational intelligence, experiential intelligence that you have, right, which can help founders solve a very specific problem, right? I would look forward to that conversation much sooner.
Thank you, Ashu, and it was an absolute pleasure. Thank you so much.
Thank you.